Already listening here. Hey, everybody, which is my favorite phrase ever. Record. Hey, before we begin, oftentimes we'll get these messages. Igor and I were talking about this morning. We'll get messages from folks and they'll say, hey, can you program my strategy? That's why I want to join your program, is that so you can program my strategy. And our answer is always, just go to upwork.com, post your job, and someone will build your strategy for you. But there's like some feeling that people have that if we program their strategy, it will be more successful. And I always find that to be really hilarious, because today what I'm going to do is show you why what we do is successful. And it doesn't have anything to do with the rules of the trading system. All right, let's see here. Portfolio, I'll just pull up a blank presentation here. So I'm getting set up. Welcome to the recording or the live broadcast or whatever it is, or if this was put in a time capsule or buried with me in the cemetery and now you've dug it up and you're watching this recording. The reason this would be buried with me is that it's basically the secret. It's basically the reason that I have been successful. And it is the reason that Igor is successful. It's the reason that Scott Haywood is successful. And it's the reason also, strangely enough, it's also the reason that folks criticize me, Igor, Scott, Serge, and so many other people that have reached $200, $500, $600, $800,000 a day, $10,000 a day. It's both sides of the same coin. It's very strange. So I'm recording everything. I'm going to share my screen. And I just want to make sure that you can see my screen. So hi, Jimmy. Hi, Igor. Hi, Jay. Hi, everybody else. Here we go. The reason. And then we're going to call it the portfolio. Portfolio approach. And I'm going to talk about why people hate it and why people argue. And then I'm going to talk about why people love it and why it works. So we're going to start, we're going to do love over here, and then we're going to do angry hate over here. So the reason people love it is it makes money. And the reason people hate it is because they're jealous. The reason people love it is because it simplifies everything. The reason that people hate it is that it contradicts popular opinions about trading. The reason people love it is that it is consistent. And the reason people hate it is that it's small gains compounded, and people get real frustrated, real anxious, and they don't want to go slowly, they want to go quickly. And in this presentation today, I want to talk about why it is that you can give me and Igor and Scott Haywood and Joel and Bill and everybody else, you can give us any robot in the world, you can give us any strategy in the world, and we can make it work. I can make, I don't know, that sounds really egotistical, doesn't it? But with what we're going to talk about today, we can make any approach work. And it's why I'm not interested in lots of adjustments or changes to the system, because we don't need to, and because those changes don't really affect the overall approach. And I'm going to put a note here why optimization doesn't matter. Okay, that'll help me remember what I'm going to talk about next. My mom taught me when I was growing up that if I tell the truth, I never have to remember anything I say. And it's now been 46 years that I can't remember anything that I say. I literally can never remember. So I have to put those notes so that I know what I'm going to talk about next. The portfolio approach is very different from the binary approach to trading. The binary approach to trading is zeros and ones, a loss or a win. And it's all about individual trades. And it's all obsessed with really well-timed entries, a take profit, and a stop. The number one question I receive when I teach someone a trading strategy is, where's your stop? Every single time. And everybody's been taught that there is an entry, and there's movement, there's profit, and there's a stop. And if your system looks like it makes money, someone will go backwards on the chart. So this book, Trading in the Zone, is super famous. Mark Douglas was a friend of mine. May he rest in peace. But I hated the end of his book, because at the end of his book, he basically recommends that you backtest 25 examples of your trading system. And I think with 25 examples of someone's trading system, you know nothing. You're probably dumber or more falsely confident about your trading system than you ever should be. And I think that this number should be something like 2,500. We'll get to why that matters in a minute. And so what people do is they become obsessed with, does your trading system work? And what it means is, when it works, it's got a lot of ones or wins, and it's got a profit target that's larger than the stop loss. And over the course of 25 or so trades, it looks like it wins more often than it loses. And this is called the binary approach to trading. My individual trades matter. They're very important. And I know a system works if the stop loss is real tight and the profit target is real far away. And and people get obsessed with conversations like this. Oh, my broker is a straight through processor, or doesn't have a dealing desk, or people get obsessed with all these things dealing with binary trading because the individual trades matter. Oh, my trade's a loser. What should I do? Oh, I just had a win. I'm smart. And this is how all trading is done. And you know this, and I know this, that the world of trading is filled with traders who point out the one trade that made $1 zillion, and they show that off forever. And that's all anybody's ever interested in is, what do you think about the S&P 500 right now? What do you think about the stock market, Rob? What do you think about Apple, Rob? And that's a binary conversation. And my answer to every single one of those questions is, I don't care. I have no interest in those conversations. I don't care about them. I don't care about optimization. I don't care about changing things. I care about what I call the portfolio approach. In the portfolio approach to trading, some of your trades, marked in red, are losses. Some of those losses can be pretty big. Some of those trades that you have are wins, and they're marked in green. And some of your wins are a lot smaller than anyone would ever expect. And some of your losses are bigger than what you would expect. But on the whole, as a group of trades, you're profitable. Meaning each individual trade doesn't matter. Over the course of a portfolio trader's year, trading the robots that we talk about in our system, that trader might take 5,000 trades, and 4,000 of them might be wins, and 1,000 of them might be losses, or whatever. Or this might be 2,000 and 3,000, or it might be 1,000 wins and 4,000 losses. And the winners might be smaller than the losses. And the risk to reward might be screwed up. And Van Tharp, the super famous superhero myth god of risk management, who's positively out of his mind, would hate everything that we do, because he thinks that trading is binary. He thinks that each of your trades should have an expectancy, that you should, when you approach the market, have an expectancy on each trade, which is ridiculous. Each individual trade is meaningless. Each individual trade could be the biggest loss you've ever experienced or the biggest win you've ever experienced. And there's no way you're ever going to know ahead of time, ever. There's no way anyone's ever going to know ahead of time with any likelihood of success if a trade's going to be successful or not. The best we ever have is a guess. And it is a world of uncertainty. The binary approach to trading is absolutely obsessed with certainty. I'm going to make this smaller. Obsessed with certainty. The portfolio approach accepts that we live in an uncertain world and we don't know the future. And the best we can do is have a group of trades that on the whole are winners. And every single time that the winners outweigh and create profit, regardless of and despite the losers, we close everything. We bank the profit and we move on. We may at times hold a losing trade open for a long period of time. And during that long period of time, our winners are just racking up. And that losing trade that we have isn't causing our account unnecessary, extraordinary damage. And we're not worried about it. I just closed a euro-yen trade a month ago that had been open for 2.5 years. It was at the worst a $2,900 loss across a portfolio worth about $185,000. So it was a small loss, but it was a lot. It was thousands of dollars, and it was thousands of pips in the hole. And I used to show it on webinars, and people would get concerned or mad, or they would use that as evidence that I don't know what I'm doing, or why didn't you close it early? And well, it's because no one knows. Listen, you can be the greatest, most disciplined trader in the world, and if something happens in your family and you got to race out the door and your trade doesn't get closed and you end up with a trade that's open, even with your best efforts, something's going to go wrong. The world is going to be uncertain. The fact that something can happen means it will eventually happen. It's Murphy's Law. And so you get stuck with a bad trade sometimes. Now, with that euro-yen trade, I got stuck with a bad trade. I don't even remember how it started, but I was in that trade for at least 30 months, if not more. And it closed in January. It finally just closed. And over the course of that trade, I sat on other trades that were winners that were taking profit. And over the course of the entire history of that trading account, everything was fine. Everything was totally fine. And the winners collectively outweighed that one losing trade. And that one losing trade never got all of my attention. It never became the most important thing in my life. Now, if you take a portfolio approach to trading, you suddenly realize why I don't care anymore about trying to extend the wins or filter. This is another one. This is the second most frequent question I get. Filter out the losses. These are conversations that I don't care about. You can't filter out the losses. And if you try to extend a win, what ends up happening is by its very nature, you extend the losses too, because you're going to be in the trade longer. And in order to get to its farther profit target, you have to sit on the trade for a longer amount of time. And during that longer amount of time, it might go against you. So the higher the profit target that you're shooting for, the lower the win percentage becomes, or the higher the average loss becomes. And there's some weird tribe of religious adherents to this philosophy that the Holy Grail exists in trading. And the Holy Grail is a system with a better than 65% win rate, and the winners are 2 times bigger than the losers. And there are people who will never make $1 in their quest for the Holy Grail, and they will metaphorically, they will walk over dollar bills on their way to bankruptcy. They will just walk on top of dollar bills and say, those aren't worth it. It's not enough to pay my mortgage. And they'll just keep walking on top of dollar bills all the way to zero money. And in their quest for perfection that does not exist, and they will spend half the day arguing on a forum about the validity of a moving average versus an exponential moving average. All the while, Igor is banking another $200, another $300. I think, Igor, you're at, $4,500 for the month. And he's even running a trading account that's smaller than the accounts that some of you can run. And you know what the only thing special about Igor is? He's the most determined. He is next, along with about 10 other people, one of the most determined people I've ever met. He can put blinders on to all the stuff that doesn't matter. When he figured out that what we do here works, he stopped arguing about it and he just started doing it. So here's what the portfolio approach does with our system. So here's the portfolio system. We take lots of trades. Most are winners. Some are losers. And some losers look, and I'm going to put it in quotations, look bad. So Igor had a bad trade that he shouldn't have taken, but he did, and it opened up in his account, and it looked bad, but he was on a demo of what we do yesterday with a prospective student, and he just showed it. He just showed the trade, just like I do. Like every once in a while, here's the bad one. And sometimes it looks bad. And what the portfolio approach does is you're going to watch the robot just open just tons and tons and tons of trades. And you're going to watch your profit info indicator. You're going to watch positive numbers day after day after day. But down in your terminal where you see your open trades, you will, a few times a year, see an open losing trade. You might have $20 days, or $200 days. And down there below in the terminal, you might have an open $300 loss. And you might just be letting it work itself out, and you might be working together with us and the team for that trade to close. And it's part of a whole. It's part of a collection. And you're not going to panic about it. And you're not going to say, we got to do something about this. And this shift in thinking from binary wins and losses is going to change everything about the way that you do things. Because here's what happens. Here's the good thing. Here's the positive. You'll make 200, 200, 200, 200, and that will equal an $800 profit. You'll have an open losing trade of, I'm going to just get ridiculous here. I'm just going to be ridiculous. You'll have an open losing trade of $750. And what that means is you'll make a net 50. And you and I, we're going to go ahead and take that. We're going to go ahead and go ding, 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 ding. Ring the bell. Ding, ding. We're going to ring the bell because we made $50. What every other single binary trader in the world, someone obsessed with wins and losses and individual trades, what they will go is they will go, I want my full $800. But you never had $800. You had $800 minus the $750 loss. And they go, well, why did you take the $750 loss? Why didn't you close that early? Because each one of these $200 days were done with a system that needed the room for this one to go bad. Imagine if a friend came up to you and said, I've met a woman who is just checks off all the boxes and I want to marry her. And they just dated for a long time and they knew it worked and they got married. And then a month later, they come to you and they say, oh my gosh, this woman chews food with her mouth open. I can't deal with it. And it's like, okay, so she's a supermodel. She's got a PhD in relationship therapy and then all kinds of other things that this person thinks is important. But because it doesn't fit this one small thing, they're gonna throw away the whole business. And you know people that have thrown away great opportunities because of one thing. And what happens is the binary mentality that a trader has is that there is some way to keep all $800, but never have the $750 loss. And so what they say is, and I use this example all the time, they think that it's $800 in their trading account. They think that the choice is between $800 and zero. They think, well, that's it. I'm either going to make a lot of money or I'm not going to make money. And what the real choice is between $50 and zero. That you can do this. You know that the $50 is possible. It's 100% possible for every single person to do that. But they have to accept the good and the bad together. And so people will go into zero territory. They will literally just throw away their trading accounts and go and margin call their trading accounts. 90% of traders lose 90% of their capital within the first 90 days. And they'll do it because they're searching, they have to have, they want that $800 and they think that it's theirs. And they think, nope, I got to have it. But they're not able to, it's not possible. And what they don't realize is you take the bird in the hand is worth more than two in the bush. You take the money you can get and then you compound it. And that's the portfolio approach. You realize that every once in a while, you're going to close out a bunch of losing trades and it's going to take away from the profit in quotation marks that you had built up. And if you fight to never have a loss or never close a bad trade or never have anything go wrong, you'll just be like every other binary trader in the world that can't accept the bad with the good. But we don't think of things that way. I've created a worldwide family of traders who can trade for a living based on the fact that they accept both sides of this balanced universe, where we have a collection of trades in a portfolio approach. That collection of trades on the whole is profitable. It's less profitable than the theoretical, imaginary holy grail of never having to deal with bad situations, but it's still profit and it's still exceptional. It's just incredible what you are going to be able to do within a week or a week and a half. Okay, so that's my presentation on the portfolio versus binary approach. This is going to make a lot more sense once you're up and running on a demo account. I had as a little story, I had a great conversation this morning with Alejandro. And Alejandro wrote me and said that his portfolio approach wasn't working because he had one trade that was losing. He started with a $5,000 account. He got it to $5,007, but there was an open loss of $131. And he said, this is broken. It's not working. And I said, you just hang on. You just hang on. You just hang on. And he goes, I can't hang on anymore. I can't hang on anymore. I can't deal with this. I think I've done something wrong. And I think I've made a mistake. And I said, well, here's what we're going to do. You started with the demo account, right? He goes, yeah, started with the demo account. I said, okay, what we're going to do is we're going to close that $130 trade because it's a demo. And you're going to start fresh with a brand new $5,000 demo account. And he goes, oh, I don't know if I'm supposed to do that. And I convinced him to do it. And he's starting from scratch and he's going to start over and he's going to look at it happen again. And he's going to keep doing this until he feels comfortable with the fact that his account will be growing slowly. And what happened with him was he wanted his account to grow by, it was $1,000 before he would close any losing trades. And he realized that that was asking too much. And so we started with a lower number and he's going to be perfectly fine. And this is going to happen to every single one of us here. At some point in time, you're going to go, wow, this feels weird. This feels really weird. And the reason it feels weird is that this way of doing things contradicts popular opinions about the way that trading should go. It goes against every single bit of fake advice from people who will never show you their real account. And the fake advice is, no, you should never hold a losing trade. You should think of your system as having an expectancy on each individual trade. Your risk to reward ratio has to be X, Y, or Z. And none of those people will ever show you their trading account, like Igor or me or Scott Haywood or anyone else. Scott Haywood next week or the week after is going to show you a trading account with $500,000 or $1 million in it. And he's going to tell you the story of blowing up $1 million account because his trade size was too big, and how trading a separate $1 million account has been just fine. And you're going to see the giant amount of risk that someone who really, really, really is comfortable with extraordinary amounts of risk is doing. You're going to see some crazy stuff, and we're going to show it to you openly. We're going to talk honestly about it. We're going to unveil everything. We're never going to hide anything from you at all. And I think that's the trick here, is that transparency always wins, and being upfront with you always wins, and being honest about the risks is always going to be more successful. And you're going to get that from us every step of the way. Also, you might feel weak working with computers. You might feel like you're not the greatest using a computer. We'll be here for you every step of the way. It's not an excuse. And I don't think anybody here has made that excuse at all. I mean, you're all just troopers. It's tough to get set up. The first 30 days are like boot camp or hell week or whatever you want to call it. But it gets a lot easier from there. Okay, I'm going to conclude the presentation element of this now, and then we'll move on to any questions you want to bring up at all. I'm here to answer all of your questions. But the basic presentation part is over. Excuse me. So sorry. And then I'll stay on, and I'll even keep the recording going so that we can record answers to your questions if you've got any questions. So bring them on. I'm here for you. We're all here for you. And good to see you. Jason says, this is so good. It reminds me of other areas of my life where I'm thinking binary. Yeah, me too. Like, so I've been married now almost 2 years in March. And it's funny that, you know, the first year of it is the honeymoon phase, and nothing bothers you and the person can't do any wrong. And then the second year I can see where I'm annoying my wife, but that she accepts me as a whole because I'm a good guy. That, you know, life is, you know, my son's having all kinds of problems and struggling with stuff, but on the whole, he's a great kid. And, you know, you can't throw away mentally this other human being just because some of the things that they do aren't perfect or whatever. Same, it's just how life works. Life isn't binary. You know, there's always going to be a balance. There's going to be opposition in all things that we do. All right, I'm ready for your difficult questions. John says, morning, I'm still having issues on the demo account. Can't reconnect to it, so probably need some help with that. Last night, I just set up the Finch on several charts, but didn't want to go far since only my live account shows up. Yeah, we can help you switch between your live and your demo. I'm gonna go ahead and pull up my shadow server, and then we'll take a look. So John's having problems reconnecting to his demo account. If anybody else has questions, comments, thoughts, observations, or anything else, we'll cover those too. And if you don't have any questions, that's fine also. John, you know also that Jason or Igor or Jeremias in South America, or, you know, someone can also get on there and help you out. And we'll be sure to do that. And it's like you have to do something. Once we teach you how to reconnect to your demo account, what you should do is you should literally do it over and over like 20 times. And I know it sounds absolutely insane, but immediately after getting it up and running and going again, you should just log in and log out like 20 times, just a ton of times. So inside of your MetaTrader account, what you have up here is the Accounts tab, John, and this might not make any sense. And if it doesn't, don't feel bad. Just tell me, shut your mouth, Rob. This isn't helping me at all, okay? So if it doesn't help you, what you need first to get from your broker, you need to make sure that you have the account number and password for your demo account. Make sure you have that handy, and make sure you check with them that you've got it. So that's number one. Make sure that you 100% have that information. And what you're going to do is you're going to right click on accounts over here on the far left, and you're going to go log into trade account. Now that's going to pop up a box at some point in time, and it's going to ask you for your login information. Mine's going a little bit slow here, so we'll see. And I'm going to check the Q&A in Zoom as well. So let's go to the task manager. And I'm going to close MetaTrader because it's taking a little bit longer than It should. There we go. And I'll just restart it. It might close all my trades when I do that. It's fine. You can just see it all. You can just see it all. All right, so we're gonna work on that. Okay. So okay, it did not close all the trades, although it might any second here. Yeah, I think it's gonna. It might do it. Okay. Right click, log into trade account, and it pops up this box. So what you'll do is you'll put your login is your account number. The password that your broker confirms is your password. And then you got to choose the server in this list of servers. And if it doesn't show it, you actually have to type in the name of that server. And that's how you connect. And then you switch back and forth between them by double clicking on one or the other. And it will take you out of one and put you into the other account. I'm going to look at the Q&A. Ruben says, what pairs seem to be the most effective? So we talked about that yesterday. In the recording that you'll see in yesterday's lesson or recording, you'll see the pairs that I run, but I'm going to put that up on the screen right here for you. You can just look at the list right here, and I'll move things out of the way so that you can actually see the currency pairs on the screen. Lloyd says, can you explain the equity close all? Yep, we're going to do that on Monday. Lloyd says, how do you really know if the VPS is working? I have one from Oanda. Well, you know it's working if you can log into it and you're showing lots of closed trades and open trades. That's how you know. Look at this. I got a frowny face on my euro pound. Let's go ahead and click allow live trading. So Lloyd, you'll know if you open up your VPS and you see trades going and you see open trades and you see in your profit info indicator that trades are closing. Rob learned you have to move money from one demo to another. Yeah, that's possible. Yeah, it's possible that you have to actually move money into a demo account. Lloyd says, it seems like nothing really changes in the balance until I turn the computer on. Well, how would you know that the balance was only changing until you turn the computer on? So let me walk you through what a VPS is and how it works. So let's just go back to the presentation over here. So just do a new slide. So a VPS is a Windows computer that is running always. Like even if you close the window, like if I close this window in my shadow server, if I close this, shadow will say, you know, you've just closed down or whatever. That doesn't mean the Windows computer has shut off. That just means that I've closed the window looking into that computer. That's all it means. So it would be, if you've turned on a VPS and you've loaded the robot into it, then it's running, even if you close the window looking into your VPS. Now, if there's some button somewhere that says shut off my VPS, then you would know for sure that was gone. Like something was definitely wrong if that happens. Oh, John, okay, invalid account, right. That happens to me too all the time. So if I could, I would contact the broker, but theoretically, you opened your account with Justin at Forest Park FX, and so that's one of the reasons that we've got him. You can reach out to him and say, hey, Justin, I'm having a lot of trouble logging into my demo account. I don't know what server I'm on. And, you know, reach out to us for even the simplest of things. Because like I said, at the beginning, it's going to be a pain. It's going to be difficult at the beginning. And all of this stuff is going to be super easy 20 or 30 days from now. And most people, they work for years and they never figure out how to make $1. And you're going to work for 20 days and you're going to figure out how to do everything. So you're going to be in really, really good shape. Okay, I'll stick around some more. Ruben says, what data point seems to help the most using the portfolio approach? Trades per day, dollars per day, per currency pair? Doesn't matter. You could be trading 2 currency pairs and have the gains from one offset the losses in the other, and you could be using the daily chart. It's not really about that. It's about not thinking that your one trade that you just opened ought to be a win or ought to be a loss, and that it's fixed. All this stuff about fixed, like my loss is this and my profit target is this, and I trade one pair and I have a stop loss and a profit target, that's never going to work. So it's more, Ruben, just about being flexible, having a method and a routine and a systematic way of looking at things, but not having a really tight grip on each trade and saying, oh, that has to work. Like somebody asked the other day, say, well, if my Finch is running and it's in a profitable trade on the British pound, but I really think it could earn more, could I extend the profit target on that? And the answer is, of course. Of course. Ruben says, how often do you close out all the trades? I don't close out all the trades. The robot does, which we'll talk about on Monday. And it's closing out every trade multiple times a day, usually. Ruben says, if you run the robot for several weeks and have several trades running with a loss, what criteria do you use to rescue a trade? We're going to talk about that next week as well. So we'll have, I can actually already post lessons about that. I can actually put a lesson or two right up on the website over the course of the weekend where you can watch some lessons about that as well. But typically, Ruben, so that you have an answer while we're watching, typically, if a trade is losing 2 to 3% of my total account value, I step in and I look for a third trade. Might not find it, but I'll look for it. And I've got a bunch of lessons on how we do that. Some people don't even, Ruben, some very successful traders don't even rescue their trades, and they're fine. So it's optional. I think it's super helpful, but I will definitely answer that. When you're running the honeymoon Finch or the Finch that closes all the trades multiple times a day, it's just not going to happen as often. You just won't need it as often. It's pretty awesome. All right, I'm here for you. I'm going to stick around for a little bit more and make sure that if you've got a question, we can answer it. We've also got the Telegram group. A few of you have really reached out to me and others on the Telegram group to make sure that we are helping you out and you're getting the answers you need. So we love helping you. And all right, we'll be back. Now, tomorrow, tomorrow is I'm going to upload some lessons tomorrow that you can watch at your leisure. Our next live session will be on Monday, the 25th. Ruben says, what is Igor doing that is producing 20% per month that is different for me? He's just comfortable with more risk, meaning his trade size is larger than mine for the size of his account. I'm also closing trades more frequently than he is. He's racking up bigger dollar win days. If you think about it like this, I'm the worldwide example of this strategy. So I can't ever have a margin call, and I almost can't ever show a big losing trade. It risks alienating people who would otherwise feel comfortable trading the strategy. So I consider that I have to be the best example of what I'm trying to do. I've chosen a life where I balance trying to make the most amount of money with trying to help the largest number of people. And helping the largest number of people comes first. Let me answer the question in another way, Ruben. If I could make 12 to 24% a year for the next 5 years, then in 2024, when I relicense myself with the National Futures Association and want to manage money, I will have had 5 winning years in a row of between 12 and 24%, and I'm going to manage $50 million. So I don't care if I make 20% in a month. I'm not trying to make 20% a month. I'm trying to get ready to manage $50 million. It's a much different goal. When you extend your time horizon on goals and you give yourself more time to succeed, you can reduce the stress of having to produce a larger return in the short term. I hope that answers. So number 1, he's comfortable with more risk, so his trade size is larger. Number 2, he doesn't close trades as frequently as I do. He lets them run a little bit longer against him. And number 3, he's trading for income and I'm trading for track record. So John says, what should we focus on for this coming weekend? This is a great question, John. I think just getting comfortable with all these questions about setup. And I know some of you are already feeling super confident. If you got the demo account running, you're sure that it's working, that's great. Then sit on that accomplishment now. And if you don't feel comfortable with those things, let's get everybody up and feeling comfortable. Also, like for example, make sure that you know how to switch between your demo and your live account. Although you won't need your live account for anything right now at all. You don't need it. And you don't really want to switch over to your live account with the robot running in your demo account, because the minute you switch over, all of a sudden your live account is running the robot and your demo account is running the robot, but you're switching back and forth between them so they're not on all the time. If you switch back and forth between accounts inside of MetaTrader, one account's no longer running and the other one is. So you should, with almost no exceptions right now, everyone should just be running the demo right now and making sure that everything works and watching things go wrong or having questions or whatever else. All right. Happy to hear from you on Telegram. Take questions day or night from everybody here. Never worry that it bothers me or that it's a concern. We'll see you on Monday live and in some recorded lessons that I upload in the next 24 hours. This will be posted for those of you watching and want to watch it again. Sometime this afternoon, this will be posted live. See you later.